So if you are a beginner investor or exploring options for investing, do not waste your precious time. Instead you watch this video. I think only 3 things is important before investing. Where, why and which. Check the short explanation of Rakesh Jhunjhunwala, where he explains very simply how to invest, how to exit and all the important points.
Now I want to go about personal investing. A lot of people are interested about investing. But what is this act of investing? How does it start? Why do you link investing only to the stock market? Investing can have various asset classes, no? So the first task of an investor is asset allocation. Should I put the money in debt? Should I put the money in equity? Should I put the money in gold? Should I put the money in land? Right? Should I put the money in art? So how do I allocate my assets? Right? I think I'll have to go to the right. Now, how important is this asset allocation? See, I had to do nothing in life. In 1971, if I had bought gold, in 1980, if I had sold that gold and bought the Nikkei, and 1989, I had sold the Nikkei and bought the Nasdaq, my return would have been 26% compounded. 26% compounded means your money doubles in some 33 months. So over a period of 30 years, your money will be some 40, 50, 60 times. Right? So this is how important the task of asset allocation is. So the starting point of investing is where, just because Rakesh Jhunjhunwala says, don't put all your money in equity. Right? For any investor. Okay? So your first task is allocation. And there can be courses and courses and courses on allocation. And it is the 60% result is your allocation of asset and 40% is specific asset in general. Am I right, Rakesh? Right? So first act is asset allocation. Second is the importance of consistency. Because we are having a lot of students from business families. I come from Agarwal Marwadi family, so we always say vyaj. 17 taka, 16 taka. Right? And I'm proud to admit it here. I am trading roots. Right? And why not be proud of your heritage? You can't change it here. Right? So, see the difference between a 10% return and a 15% return over 20 years. So, when you allocate, you hear that Warren Buffett's compounding, no? Marwadi का compounding और Warren Buffett compounding same है. कि प्रिंसिपल बढ़ाओ और हर साल प्रिंसिपल खोनेगा नहीं और भले कम मिले लेकिन surely मिलेगा. Because missing 1 year also breaks you down so badly. So I wanted to point out the importance of asset allocation and of consistency. So don't go for too risky assets easily. Right? Then second is choosing an investment. This is another boring long one. A lot of people ask me, how do you choose an investment? The most difficult adjective in the English language are beauty in a girl and value in a stock. It differs so much from the beholder. Right? So how do you find value in a stock? Because for every buyer there is a seller. Some like Nandita Sen, some like Sushmita Sen, some like Ashwarya Rai. So, beauty has its own concept here. So, it's so difficult. So, when I go to buy a stock, someone is selling it. So, therefore, that person feels there's no value in that stock. So, how do you choose a stock? So, see, the basic thing I will tell you is when you invest in a stock, think of the business model of that company. I'm talking of invest, I'm not talking of trading. Huh? Trading may think momentum. Here you think, when you invest, think of business model. Right? And I think the first thing I look at when I invest in a company is the opportunity. Would I have invested in Titan if I didn't feel that the jewelry market in India will go, from 5% branded to say 20% branded? And in 5 years, if 1 lakh crore is going to be the branded market, is the jewelry market in India, the branded market will go up from 5,000 crores to 20,000 crores. So it's a 15,000 crore opportunity. So, nobody can grow bigger than the opportunity. Think of Infosys. What would have Infosys been without the internet? Did Infosys in 93 know that the application of information technology will expand the way it did? But it happened and it expanded Infosys tech opportunity. So the first thing we should look at is opportunity. Look at infrastructure. What opportunity is in India? Right? And of course, when you look at the opportunity, also look at the addressable opportunity. Opportunity infrastructure in India will be 25 lakh crores, but my company can only make water pumps. Only the knowns, the unknowns, to make them knowns is difficult. Right? EPS is predicted to some extent. Ps are very difficult to predict. But as long as your companies are gathering earning, can come in 3 months. Earnings can't come in 3 months. Say there was no growth in the corporate sector in the stock market between say 1999 and 2003. Very bad years. But once the market started moving up, the earnings were accumulating. You got the Ps just in 6 months. So as long as the company's earnings are expanding, don't worry. Right? Be patient. यार अभी ले लिया फंस गए तो अभी क्या करेंगे? पेशेंस हो, कहाँ जाएंगे? Right? And make exit an important decision, not driven by profit or loss. I think it's very important. People want to bloody sell the flowers and water the weeds. So people want to sell the profitable investments and keep the loss-making ones. So I think every exit should be, and I have a slide on exit, should be an independent decision. Right? Exiting an investment. When would I exit an investment? First thing is I have limited capital, and everybody in the world, whether it is Tata, whether it is Birla, whether it is GE Capital, everybody has limited capital. So when I find that my asset, any other asset gives me rate of return which is better than what I anticipate on this one, I will exit an asset. I will exit some investment, right? Then review of critical factors. Suppose I feel that Titan's business model is affected, the growth will not come, or some other company is able to dominate, or the margins are permanently impaired, I may sell, right? Relative opportunity, as I explained the first one. EPS or EPS expectation peaks, this is very important. You know, in Infosys, in 2000, McKinsey and NASSCOM did a study that software industry in India is going to grow 100% every 2 years. So for 2 years, 3 years, Infosys profits grew 100%. Everybody assume for next 10 years it will grow 100%. So EPS should not peak, may not peak, but if expectation of EPS peaks, that could be a exit point, right? And absurd P's, because expectation of P is of absurd expectation, right? I think that's the time to sell. And remember one thing, it's not driven by profit and loss, it has to be an independent decision. Okay, sir.